And again, this is Tom Randall from Golden Care. I want to welcome everybody to the webinar today. Hopefully we'll have a few more people jump on, but we've got a great sized crowd here. And it's no surprise to me because we're really privileged here at Golden Care to have Harry Crosby willing to take up some of his valuable time today to present. And I think you're in for a treat. Harry's, it's great introducing him because he's one of the few in the crowd out there who needs no introduction. He's been around the industry for a long time, and he still holds some records, I think, at Genworth. He's a terrific producer, a terrific guy, and it's been a pleasure to work with him over many years now here at Golden Care, but more importantly, I'm really privileged and proud to call him my friend. So, Harry, it's my pleasure to introduce you, and I'm going to turn it over to you, and you go ahead and steer this ship, and if you need anything, I'll be here. Thanks.
Thank you very much, Tom. I don't hold any more records at Genworth. There was a time I did, which I'll share with you. Back in I had placed 560,000 in 1995. But you know what? Fame is fleeting. The bottom line is we learn more, and if you don't continue to learn and look for opportunities, you'll just fall behind. And had I not been able and willing over this last 25 years to change, I mean, let's face it, at one time I was proud to claim that I was a purist. A lot of people on this call know that that's the case. I was comfortable selling one product that I thought happened to be the best, and I didn't bother to show anything else. People believed me, and I think I was right at the time. Things changed, though. And so if you want to continue to grow, and I'm 72, and I'm continuing to grow. I'm shrinking a little bit probably, but I'm trying to continue to grow in my profession. Then you've got to be open to new things and new ideas. Opportunities don't just happen to you. You have to create them. So you either have to adapt. Now here's the thing. You see that where I've learned in 25 years? Well, I think the problem is that over that 25 years, I think I forgot a whole lot about what I learned. And I can share that with you because I attended a webinar yesterday by one of my friends who happens to be on the call. I think he's in the car, Mark Goldberg. And I was reminded that I was once a really great one-call closer. I closed about 86% of my face-to-face interviews. Well, Mark does a much better job closing on the first call with webinars on using screen sharing than I do. And so I learned some of the things that I used to do that I don't do anymore because it's online. Most of all of my presentation is online, that I probably should be doing. So here's what I'm trying to tell you. I don't care how long you've been in this business. If you've got $5 million on the books like Gene Cutler, he's got $6 million on the books. He's in New York. He by the way, Tom, he broke my record 2 years after I placed 560. He placed over 600. So I'm proud to say that I'm glad for somebody like Gene Cutler to be the guy who did that. So, and he may hold the record today. But the bottom line is, it doesn't matter what kind of records you hold. We continue to improve. And if I can do anything that would help you, is if you're going to stay in this business, you've got to pick out things that you want to do that improves, makes you better from day to day. And so yesterday I got better because I listened to somebody who was better at something than I was. And there's a lot of people who, but here's one of the things I am good at. I'm good at picking out opportunities and maximizing my efforts. So for those who don't know who I am, you can, without staying on this thing too long, I've done a whole lot of stuff. I sometimes tell people I'm a has-been, but I keep trying, and I keep making long-term care insurance sales, and I keep making alternative sales, and I have my son working with me for 5 years, and he's much better than I am right now in many ways. So anyway, I'm going to share with you what I think is some things that could help you improve and maximize your efforts. Now, philosophies of life, all these things apply. Make your own destiny. You've heard that before. Create your own future. I do these things, and then you hear what sounds like maybe it's the opposite, is play the hand you've been dealt. Well, you play that hand, but you maximize your effort, and you got to ask for help. So many people don't ask for help. We have a multitude of people who love to give back in this business. One of the great things about the long-term care insurance business is most everybody I know likes sharing what they do. And this opportunity here to share with you guys some of the things I've done, I figure that's an honor and a privilege to be able to give back. I think that we all ought to have an attitude of gratitude, and that is to say that we need to appreciate each other and what we bring to the table. George Bernard Shaw, you can read that. A reasonable man adapts himself to the world. The unreasonable one persists in trying to adapt the world to himself. I did not want to be that person. I stayed a purist as long as I possibly could. And when I say a purist, I think y'all know that means I sell long-term care insurance. I don't do anything else. I don't add to that. And if you can't qualify for a long-term care insurance policy, so long, goodbye. I'm sorry I couldn't help you. Well, I mean, I hate to be that callous, but that's it is really what I had to do, because there was a time when I didn't do anything else. But it became apparent to me I really hated not being able to give other options. And that is the driving force that made me start looking into other ways to help people plan ahead for long-term care. And that is what I call maximizing your effort and having faith. Now, the faith part is having a positive attitude towards the future and having faith that you can figure things out ahead of time. And so I will say that if anything that I've had through this last 25 years since I started in this business, I've had faith that it would work out. And I continue to have that faith, which gives me a positive outlook on life. Instead of what is that thing I used to say? It was an acronym for OBD. That's when the optic nerve is connected to the large intestine and gives you a crappy outlook on life. That is what I don't have. I forget the acronym. But so I try not to have that and have a positive attitude. So here's the issue that we face. If they don't qualify for long-term care insurance, what do we do? Well, there's a number of things that Will and I actually do to help people when they cannot qualify for long-term care insurance. And you'll see a list of those, and we've actually used all of them. And what I'm going to concentrate and focus on this morning is, what is that?
A buzzer.
Oh, Will's got a buzzer. He's going to keep me informed on time. All right, no, so what?
When you recovery cash versus recovery care.
Oh, okay. All right, so what you're looking at is a series, the top three. It's hard to say the names right. I mean, look at it. It's critical cash, recovery care. Those three we use, and I use, when primarily, and I go there first, unless I've had an indication that somebody's got a lot of money they're willing to, I'll say a lot of money, 100,000 or so, that they're willing to put aside since that's what their long-term care insurance is, maybe they would be willing to invest it in such a way so that they could double it or 2.5 times that, and then use a multiple of their savings to protect them against the high cost of long-term care. Of course, that would be annuity care by One America. But we're not going to talk about that this morning. We're going to talk about some specifics related to critical cash, recovery cash, and recovery care. Now, if you didn't join this seminar looking for details and you don't have a computer in front of you, I'm going to tell you that you're probably going to get lost here and say, oh, gee whiz. And I do that. Listen, it's okay. I do that too. I'll go into a seminar, I'll kind of listen casually, and then I'll get lost in it because my mind wanders. Well, I'm telling you that if you don't have the computer in front of you and you're not paying attention, that probably the rest of this seminar, will be a waste of your time, because I'm going to get into some details about how I've used these and how you might use them. If you don't want to do that, you know you're not going to do that, then you probably this seminar is not going to do you any good. So let's look at what our objective is going forward here. So we're going to look at a detailed view how you can combine alternative products to provide prospects who can not otherwise qualify for long-term care insurance. And we're going to use some kind of like out-of-the-box thinking, because normally we don't combine products to help people plan ahead for long-term care insurance. But you can do it. Will and I've done it more than 2 times, and I'm going to share with you a specific experience where I think, if you can see the story and understand the story, it helps you when the next time you have a situation similar to what I've had in the past. So here's what I've got. I've got a lady in her 60s, a true story, who wanted long-term care insurance. And I discovered that she was receiving disability income. So what do we do? What do you do when you reach somebody and disability. I can tell you, most of you, a large percentage of you, don't go do anything because disability is not something that we can deal with the Mutual of Omaha or the traditional long-term care insurance. And in most cases, we're not going to be able to deal with it with One America's asset care. We could go to annuity care most likely, but maybe this client doesn't have $100,000 or $200,000 that they want to or willing to put aside put it aside for long-term care. So in this particular case, this is a true story. Barbara was turned down for Plan A critical cash. I thought she would qualify for Plan A. We applied for Plan A, but she was declined because she had some cardiac issues that simply so they offered her Plan B, which she took. She accepted Plan B, which you know, and if you don't know, Plan B does not cover stroke, heart attack, or coronary artery. And if you're not familiar with critical cash, you should know that it covers, if you can get Plan A, it pays based on the diagnosis of the major conditions that cause long-term care insurance claims. So what are those major conditions? Stroke, heart attack, Alzheimer's, that's the big one. So upon diagnosis of paralysis, coma, it's a whole list. But if you get diagnosed with these conditions, then critical cash pays simply based on the diagnosis. And they get that money in a lump sum. If they go to a nursing home or go to a facility, then critical cash pays an additional amount to help pay for the nursing home or the assisted living facility. So critical cash is a really special. And listen, I've sold a whole lot of that. And some of the people that are in my hierarchy also have sold a lot of critical cash. It does fill a need. And the big thing is, you can get it if you're on disability. So here's an alternative. And why did I go to critical cash? I thought if she could get Plan A was probably a really good alternative for her because, again, it pays for the conditions that cause 70%, Plan A, of the diseases and diagnoses that cause long-term care insurance claims. Anyway, the bottom line is she wasn't able to get Plan A. She was able to get Plan B. So I felt, while I recommended that she take Plan B, I still felt that there was a gap because she had some heart problems, right? And if that was what caused her to need continuous care, or she got diagnosed with one of those conditions, I didn't have any way of helping her because she was denied. So I wanted to share with you Barbara's story, and this is where it can get detailed, and you may say, oh, gee whiz, and you go to sleep and you stay on the call just so you can get through with it. That's all right. I understand. I've been there. But Barbara's story, you got to understand that Barbara talked with me on the phone, and I established what we have to establish in every interview, whether it's in face-to-face or whether it's online. I've established rapport, need, and trust. I've established that, which are the necessary components to the sale. So Barbara felt like I was looking after her best interest. So upon the delivery of the information that she did not qualify for Plan A critical cash, I sat down and had to figure out just exactly how I could help Barbara. And so I wrote her a message, which I expected that I would have to follow up, have a conversation. As it turns out, she accepted the message that I wrote and bought the additional coverage. So I thought I'd share that with you. And if any of you want this letter, I have provided it to Tom to give out to you. It's not all you'll see is Barbara. You won't see the person it's addressed to, but you will see the exact letter that I'm about to share with you. So anyway, bottom line is you can see that the main issues in this letter I've highlighted in yellow. Why did she not? Oh, yeah, listen to this. The reason she got turned down for the heart and coronary artery and stroke portion of critical cash was, one of the questions was, do you take 3 medications for blood pressure? Well, I didn't recognize that she was doing that. One of them I thought was cholesterol and something else, but it was determined that she takes 3 blood pressure medications and she was turned down. So that's why she was approved for Plan B, and I'm telling her that's the reason. So I'm also telling her that she could probably reduce those medications and she'd qualify for critical cash, but you also didn't want to tell her to do that if it wasn't in her best interest and it might kill her, of course. So, considering that she doesn't have the coverage I'd like her to have, I'm suggesting that she adds some additional coverage using Aetna's short-term care plan. Now, what's that called? That's called Recovery Care, C-A-R-E. Why am I helping you do that? Because I'm telling you, it will cause you, the names will mess you up. Aetna's Recovery Care. And so I'm trying to fill in the blanks that we've left with Barbara because she could not qualify for Plan A. So I've concluded that Recovery Care will augment the critical cash policy, which pays based on diagnosis. In the case of Recovery Care, it doesn't pay based on diagnosis. How does it pay? It pays much like the long-term care insurance policies that we know today, and it pays based on assistance with activities of daily living. Now, if you read the fine print, which I'm known to do, it does say hands-on. So it is a slightly more technically harder to qualify for Recovery Care based on the ADLs than it is with traditional long-term care insurance, because it doesn't say specifically hands-on or standby assistance. But bottom line, it's pretty much like long-term care insurance. That's how you qualify. So remember, she already has coverage that would pay for diagnosis of some conditions. But what about if she has arthritis or she has a heart problem? So at this point, I'm suggesting that we add an indemnity cash policy which would provide her $1,200 a week. Now think about that, $1,200 a week for 52 weeks of home care. Now the question is, between us, of the long-term care insurance claims that are filed or the long-term care situations that occur, how many of them last a year or less? Surprisingly, a lot. The quote that we often use, and probably should be careful about using, is that the average stay in a nursing home is 2.5 to 3 years. But what we don't say, and what's not even published, is that they don't, in order to get that statistic, they don't count the people who were in the nursing home 90 days or less. That's a fact. And if you use a quote and you use an accurate quote, you would say, not counting short-term stays, the average stay in a home care in a nursing home would be 2.5 to 3 years. That's actually right. So the bottom line is a whole lot of people need care for a year or less. So in this case, this policy provides for $1,200 a week for home care for 52 weeks. And it is based on ADLs. And it's an indemnity plan, which means it pays them the cash. As long as they're getting services, that's what indemnity is, and they're going to pay them the cash. Now, the facility benefit is not so large with Recovery Cash, but remember, I also am providing them with a policy, critical cash, that will pay additional benefits in a facility or assisted living. So here, we have 90 days in this Recovery Care Aetna policy that the policy would pay $300 per day for 90 days. So that gives her some additional protection. You should also know that Recovery Care, Aetna, Recovery Care, there's a 0-day elimination period for the facility and the home care. There's an option for 25 days, but 0 days is what I recommended, and that's what Barbara chose. The maximum benefit period for Recovery Care, whatever that is, you don't have to choose the same. There are some options there, but whatever it is, there is a restoration of benefit clause that says if you use the policy up and you recover, then the benefits would be restored. All right. So I'm telling her the benefits that if she does end up in a nursing home or assisted living facility, that critical cash will pay if she had one of those diagnoses, but if she didn't, then Recovery Care could pay. The point is that both policies could pay in many circumstances. So as we end this and go to some details about the policy, primary reason for suggesting the additional Recovery Care is to provide her a way to pay for expenses that she might incur due to reasons not covered in the Critical Cash Policy Plan B. So take note that the Aetna Recovery Plan is not triggered by diagnosis like Critical Cash is. So if conditions like arthritis or stroke or other, in her case, stroke, why? Because Plan B, Critical Cash, doesn't cover strokes and heart attacks and coronary artery. If she does have that, then what would she have? She would be able to receive the cash benefit in recovery care up to the limit. So the bottom line is that having both policies, and I've highlighted these things because I wanted to bring my attention and your attention to those sentences. The bottom line is that having both policies, your coverage would be more comprehensive and sometimes overlapping. So now let's look at some examples of how this would work. And I'm sharing this with her. So here are two examples how both policies would pay. These are only just examples. So if she that was diagnosed with cancer that resulted in the need for continuous care because of her need assistance with ADLs, then both policies would pay. Alzheimer's diagnosis that ends up needing continuous oversight because of the cognitive impairment, both policies would pay. So those are times, just examples of times when she would receive benefits from both policies. All right? Well, here's an example of only when critical cash could pay. Diagnosis of cancer that does not result in needing continuous care. Now, let me ask you, long-term care specialist, how many of your clients have been diagnosed with cancer and they don't get any benefits from their long-term care policy? I can tell you that more times than not, that occurs because so many people recover from cancer and they don't need care immediately because of that. In the case of critical cash, it pays anyway. I've already had 2 claims for cancer diagnosis with critical cash, and GTL paid them both in a lump sum. I can tell you that my clients were real happy about that. I told one of them when she said, "Well, I've just got the diagnosis. She was on like a stage 1, had her breast removed, and she did have some expense, but her policy more than paid that expense, and she could, travel around the world with whatever was left." So the bottom line is that critical cash pays on diagnosis regardless of whether or not that condition caused her to need care. You got to know that about critical cash. And so in some ways that's really good. You can actually come out ahead, although that's not the objective. Now, so let's look at an example when Aetna's recovery cash policy could pay. You need continuous care because of arthritis. Why did I say arthritis? Because critical cash doesn't pay for arthritis. That's one of the reasons almost everybody can get it. Stroke. In this particular case, her policy, Plan B, doesn't cover a stroke. And almost any other condition causing you to need help with 2 activities of daily living. And I made a note to tell you that, remember, Part B doesn't cover stroke. So this is part of the reason I felt badly about not providing her with Plan A, so I'm looking for an alternative. Okay, so here's the bottom line. This is what it cost, and you're going to see how this really worked out. So I'm telling her, you can see that I'm proposing that you have both plans. Premium's always a consideration. So let's look at what happened. Critical Plan A policy she applied for would have cost her $2,600, $82.28 a year if she'd have qualified for Plan A, but she didn't. Since she qualified for Plan B, the premium was reduced to $1,764 annually. So if she adds this recovery care policy that I'm proposing here in this letter, it would cost her an additional $1,319 annually for a total of $3,083.88. So this is $401 more than what she originally planned for. But remember, this woman wanted long-term care insurance. I'm just trying to help her get some coverage. So that's more than her original budget. So she has to determine whether or not that makes sense. And I tell her I think it's in her best interest to have both. So she did, without even discussion. She thought, I sent her of course I sent her the brochures and all that, but she agreed that this made sense as an alternative. So why am I sharing this with you? Because sometimes you got to get out of the box that you're in and the box you create and look at ways to help people. This is your profession, helping people plan ahead for long-term care. I felt guilty for a long period of time because there's so many people I either refused to help, couldn't help, didn't know how to help. Bottom line is I found out there are other ways to do this. And I thought what I did for Barbara, and I still think what I did for Barbara was a great thing. I feel real good about that, and she will too today if the day comes and she needs care. Now, and if she needs care for a long time, obviously a lot of the policies that we designed today aren't designed to take care of those abnormally long occurring problem. I mean, how many people receive care for 10 years? That they've not so many. Genworth has a claim that went well over $1 million. I know, and it does happen. But I'm trying to help people with the statistical risk. All right. So now this is a summary. If you're still here, Critical Cash pays cash on diagnosis, and that covers about 70% of the conditions that cause long-term care insurance claims. That's Plan A, Critical Cash. Recovery Care pays based on ADLs and is like a shorter version of long-term care insurance. Home care indemnity benefit is available. That's an option that you add. Why wouldn't you? That's what I did. Home care indemnity benefit is available when care is received at least 3 days a week, at least 1 hour per day. So in order to receive that indemnity benefit, you do have to be receiving care. That's one of the definitions of indemnity, as opposed to the cash benefit that MedAmerica used to actually use based on cash, not indemnity. So that's like the definition of that word. So the maximum weekly cash home care benefit is $1,200 a week. Would that help most people a week? I think so. The maximum benefit period is 52 weeks. So that's pretty good help for, especially when it's indemnity. In the case of my mom, who's 95 years old and getting care, she would have had enough money to help her pay for another year because she doesn't need $1,200 a week right now. So remember, this is indemnity. Whether the person uses it or not, they're going to get it as long as they're getting some help 3 days a week from some type of agency where they can at least an hour. I was telling Will that forget the 1 hour, none of these agencies are going to come for an hour, so you might as well figure 3 hours. That's what the minimum is for most of the agencies that I know of. So anyway, bottom line is the policy could be restored, so which means there's a possibility of 104 weeks when you consider the built-in restoration of benefits provision. And that's for the recovery care. How about that? Recovery care. So both policies are easier to qualify than long-term care insurance. Disability on these two products is not a knockout. That's good to know. So the next time you run into somebody with disability, know that you know at least two products that disability is not a knockout. And they can be sold, now that we're talking about sales here, the next best thing to long-term care insurance. When I know that I cannot help someone with long-term care insurance, traditional or hybrid, or the hybrid's not a choice, then I'm going to say, Ms. Jones, I can help you with what I believe, and a lot of people believe to be the next best thing to long-term care insurance, and some people actually believe it's better. Would you like for me to share that with you? That is how you get into that. That's how you move into an alternative. It's not like, oh, Lord, well, maybe I can get you this really short-term policy that really doesn't do as much as long-term care, but it's something better than nothing. That is not the approach to take. Hear what I said. I can help you find the next best alternative to long-term care insurance, and a lot of people think it's better. Would you like to hear about it? That is a whole, so I was talking to somebody today, well, they kind of tinkered with critical cash and sold one policy, but then, I mean, I've sold, I don't know how many will and I've sold 40, 50, 100, I don't know, a lot. I do get renewal income from GTL as a consequence of it, but I'm telling you, it's a lot of it has to do with your mental attitude about what you can offer. So why not offer people the opportunity to buy something that is a good alternative? And I can tell you from experience, I've got claims going on with GTL. They paid those claims, and they got that money up front. None of them, by the way, ended up using the facility benefit, which is why the facility benefit with critical cash is so cheap. Most people get that money at home and they get that cash benefit. All right, so that's the summary. Let's do a little comparison. This is the critical cash on the left, plus, as opposed to recovery care. So critical cash, for those who don't know critical cash, there's a potential of $6,000 a month available for 24 months. That's the maximum benefit with critical cash. Now, if you recall, you can't have $6,000 nursing home benefit, $6,000 base benefit. The total benefit added together has to be no more than $6,000. Can you have $5,000 home care benefit and $1,000 additional benefit if you're in a nursing home during a benefit period? Yes, you can. but that's not how you're going to design it. I'm finding that people want to manipulate the premium, and I'm finding they'll choose $2,000. Surprised me, actually. I thought they'd use 3 or 4, but $2,000 is a base benefit, which is you could use for home care, and then $4,000 facility benefit, so that the premiums might work. And by the way, this is exactly what Barbara did. She chose the $2,000 a month base home care benefit and a $4,000 facility benefit. She's only going to get that if she's in the nursing home during the benefit period, which in her case was 24 months. So a lot of people will choose a 24-month benefit period, especially if they've been looking at long-term care insurance. This is the most likely plan, and that is what Barbara chose. So the base benefit, whatever it is received in a lump sum. So if it's a 24-month plan, it'll be 24 months times 2, which is $48,000. So that's what some of my clients actually received because they were diagnosed with cancer. Underwriting, the knockout questions are pretty easy to get by, with the exception if you take 3 blood pressure medications. The weakness is, I think, that it's insulin dependence. If they take an insulin, they can't get critical cash. It's pretty strict on heart disease. It says that if you've got heart disease, you can't qualify for Plan A. It's exactly what happened. And critical cash added a weight chart. Most of the other short-term, I shouldn't call this is not a short-term care policy. This is really a critical illness policy. But the short-term care policies generally don't have.
Howard does not. This is the only one.
Oh, this is the only one. Doesn't have I was about to say that most of them don't have weight limits. I know Medico does, but Will says Recovery Care, and he's an expert on Recovery Care, doesn't have a weight requirement. So if you're running into somebody that's overweight, you can do something with Recovery Care. So let's look at it right side by side with Critical Cash. So with Critical Cash, hands-on assistance with 2 out of 6 ADLs, just about like long-term care insurance. Maximum nursing home and assisted living facility daily benefits, the same, $300 per day for 365 days. So you could get a nursing home, and that's a lot. What does $300 a day cost with if you design a long-term care policy today? That could be a whole lot of money. It is an indemnity product that also pays a home care benefit of $1,200 per week for 52 weeks, and there's no weight chart. Now that's the comparison of Critical Cash and Recovery Care. Now there's the brochures. You can get them from Golden Care. They have both of these products available, and that's where when I sold them, that's where they went. So now, before I go to this next issue, and that is, there's an argument that can be made that Recovery Care and Recover Cash can make for an excellent long-term care, or sort of called it short-term care plan, where you combine these 2 products to come out with an excellent short-term care plan. Before I go to Recover Care, well, actually, I'm going to let Will do this because he's the one who sold this last. And we're not talking about theory here. We're talking about actual sales where we use these. I use the critical. That one I showed you about Barbara, that's mine. Recently, Recover Cash and Recovery Care was put together, and I'm going to, before I go there, I guess I should hit star 5.
The conference is now in talk mode.
Any questions you'd like to ask about Recover Cash plus Recovery Care that are not too deep?
Mainly, I just wanted to.
There's always one, Hey, I'll tell you what, Harry, I don't have a question, but I do have a comment. That was a great call, because there's a couple things that you said, and number one was, you changed, you adapted. That's one thing. But and then you said you developed need for Barbara, and then gave her the pot. And hats off.
Compliment after compliment.
Hi, everybody. Say, this is Tom Randall from Golden Care. If you can hear me, can you do me a favor? Push *6 on your phones. I'm getting over
*6. Everybody *6 except for Bob Starks. Bob, I told you, man, I want to hear what. There you go. Try it again, Bob.
Yeah, well, but what you also said is you developed me for Barbara, and then you showed her product. We on our call this week. It's funny. We were talking about recovery cash and using it as an alternative. It's a great product, and I love how you're pivoting to short-term products. I think that's kind of the way.
I'm good. How are you today?
Oh, that car. Good. I'm good. Thank you.
Good.
And you get $25,000 of coverage, and their car is $40,000. The crazy thing is, I know who that is. I'm gonna tell them you to start. Hold on a second.
Yeah, get back to mute. My two buddies with cigars, Stark and my buddy Tennessee, Harry.
You always find something. I gotta get them cheap.
Yeah, Harry, we might have to go back to Star 5.
I do. Bob, I appreciate the comment, but it's so much noise, I don't think I'm going to be able to.
And, I'll try and...
Yeah, shoot, let me go back. All right, so I'm going back.
Actually, minimum.
The conference is now in silent mode.
All right, so anyway, Bob, Stark, thank you for the call. I'm glad the rest of nobody else could hear what you were saying much. At the end of the call, I'll try it one more time if you're still there. We're almost done, but I do want to talk about putting critical recovery cash and recovery care together to come up with a good plan. So let's just do a comparison. Will, you want to do this? This is comparing recovery. On the left, you've got GTL. That's the same company that has critical cash, but they also have recovery cash. We're going to do a quick comparison between GTL recovery cash and Aetna recovery care. And you'll see how they could work together to make an excellent, first-class long-term care insurance, short-term care policy. So you want to take it, Will, for a minute?
Sure, you can jump in if I mess up. But so just bird's eye view, there's two excellent opportunities for long-term care specialists to include these two products in their toolbox. Number one is both of these products can be offered to people up to age 85. Don't have a lot of products that can do that. Aetna Recovery Care actually can go up to age 89. Both of them use prescription drug checks as the primary underwriting tool. There are some questions on each of the applications. As Dad told you, GTL Recovery Cash also uses the weight chart. So keep that in mind, but these are excellent tools for people who are just not available to get long-term care because of their age, being over 79. Recover Cash and Aetna Recovery Care are paired very well together because Aetna Recovery Care has that $1,200 per week indemnity cash benefit. So it's got an excellent home care benefit. Recover Cash, on the other hand, has an excellent facility benefit because of 5% compound inflation option that is actually pretty cheap. So if you pair the two together, you can come up with a policy that looks pretty good, and I did that with a lady in Missouri not too long ago. If you're looking at the bullet points, the benefit triggers with Recover Cash are the same as traditional long-term care insurance, so they're not more restrictive. Aetna Recovery Care, as Deb pointed out, when you look at the policy language, does not include the standby language in the recovery care policy, so it's a little bit more restrictive there. When you look at Recover Cash, consider the fact that you can start with a daily benefit of $300 per day and choose a 5% compound inflation protection option to grow that initial $300 daily benefit over time, and have a 360-day benefit period with a 0-day elimination period. All right. Over time, that $300 per day is really going to grow. So that's excellent. Now, Recover Cash is paired well with Aetna Recovery Care because Recover Cash by GTL does not have an excellent home care benefit. It has one, and the lady who I helped from Missouri, she took the one that was available, but it's only up to $75 a day for 180 days. That's not. It actually doesn't. It's not 360 days. $75 a day for 180 days is the maximum home care benefit. It is actually very inexpensive to have that on the policy with the facility benefit. That $75 a day is not growing with the 5% compound inflation option. All right, so what is growing is your facility benefit.
All right, so the people are looking, when I did this PowerPoint, I should have put 180 there?
Yes.
Okay, accept that. He's usually right. Go, Will.
I don't know about that, but anyhow, the Recover Cash is great because it has a very powerful facility benefit with that 5% compound inflation rider. When you price these policies, the lady who I helped was 62 years old, and we were looking at her for Mutual of Omaha. Well, she weighed 260-something pounds. She was 5'7". She would have been a Class 1. She also had some neuropathy. She was concerned that she might not qualify for traditional long-term care at all. We gave it a 50-50 shot for her, but she determined she would prefer to have these two policies, which were pretty much, it was a very solid chance she would get these, and she did. She'd rather apply for these than traditional long-term care. And just because she's close to the top of the weight chart with GTL Recover Cash, her premium is not more expensive. So as long as they fit within the weight chart guidelines, there's no classes, they get the same premium as somebody who was not overweight. All right. So can we go to the next screen? I think we got some...
Oh, yeah, here's something you guys, I think, would appreciate. We did a comparison looking at both the premiums, because I know that you're watching this, what in the world is the premium? So what we did here was figure out what would be the maximum premium. If you chose the maximum possible plan for each of these products, what would it be? So you want to take it from there, Will? Age 62.
Well, so for age 62, it worked really well in that age group when we took the maximum plan for GTL Recover Cash. And then when Dad says the maximum plan, with Aetna Recovery Care, we maximized the indemnity home care benefit, but minimized the coverage for the facility in that product. Because with GTL Recover Cash, that $300 a day growing at 5% compound was pretty good. So when you are pairing the two together to get that great home care benefit and that great facility benefit that's growing, for her, that ended up being $320 a month in premium.
What you're saying is that is not the maximum premium that we could get, but for the plan that you put together, you added the 5%, what are you talking?
Minimum facility benefit, maximum home care.
Oh, got you. Okay,
premium.
good. All right. And again, the reason for that is because you already covered her really well with the facility benefit using Recover Cash, correct?
Yes.
Right, okay. So the total premium, when you combine those two at age 62, is $321. Remember now, that is well, it's not exactly the highest rate we could come up with, but that would be a really good plan because of the 5% inflation protection built in to the GTL Recover Cash plan, right?
That's right.
Okay, all right. So there's a combined benefit. I don't know if you want to look at all of these or not, but make a note that this good person could have been 82 years of age. Of course, we wouldn't have figured that kind of plan, most likely.
No, because Recover Cash has three options for inflation. You can choose not to have the inflation protection. Of course, that's going to be a lot less expensive. You can choose to have a simple 5% inflation option or compound. So the age 82 example that's shown up on the screen, that is compound inflation option, and that probably wouldn't have been done.
No, it wouldn't. As a matter of fact, Will had an 82-year-old client. Didn't you have an 82-year-old client?
It's 84.
84. And what did she choose?
She chose, well, in her case, this is a different example, but Aetna Recovery Care. We did the Aetna Recovery Care max plan for her. And I don't know if you meant this one was the indexed annuity care with One America.
Oh, I combined
those two products.
All right, I've got you. Hey, you can tell that we're ad-libbing here. So I tell you what, we're going over the detail. If you want this PowerPoint slide, I'd be happy to provide it to you. One more thing. Here is the actual 62-year-old. This is the policy that you helped her get that combined both products, right? And
yeah, this is the GTL Recover Care schedule of benefits for her. And the picture on the right is the rider, the document for the compound and increasing inflation protection at 5%.
Oh, there's a reason I wanted to show that. You know what it is? You remember how Genworth Financial used to calculate their compound inflation protection? They did it without regard to the pool of money that was left. They added the 5% as if the person never went on claim. Without claims offset is what we used to call that. That's the way they figure this compounding inflation protection. And it is 5% of the previous year's amount. So it's really a good way to do it. It's the old way, and that's great. And, compared to what the long-term care carriers are charging for 5% inflation protection, that is an excellent value. Okay, I have got to the point that I'm going to unmute this thing, and if anybody's left,
The conference is now in talk mode.
anybody's left, you can ask.
That's the biggest thing today is, that's funny. I know who that is. I actually sent him an email and told him to use his own phone and try calling.
Are policies available in Georgia?
Yes. Yes, that was a great question because that's one of the issues. Cash has never been available. Retail cash, but the question was, are these two products available in Georgia? Question? Yes.
I can't, they told on my thing they had to go from 120 to Gilmore 83.
Yeah. Well, that works. Okay.
All right, any other question?
Gilmore for a long time.
Well, I don't like the route.
Yeah.
Guys, I'm gonna put it back on mute and finish here.
The
I
conference is now
appreciate
in
you
silent
guys sticking in with this call, and I'm sorry that we have so much racket in the background that we can't actually do questions. So here's the thing: you can email Tom Randall with any questions that you have regarding these three products. And if you want to send an email directly to me, I'm happy to do that. You know me, I'm an email junkie, much to my son's despair. And I'll be happy to answer it. You know me. So I hope this is helpful to you guys. I appreciate you attending, and I'm sorry I can't see you face to face. I'm going to be at the SOC next week. If you happen to go to, that's the Society of Actuary Convention. They call it something else now. 13th International something or other. Anyway, I'm going to be in Las Vegas. If you think you can still go, welcome you. I'd love to see you there. So I'm going to let this call go. Tom, if you got anything to say, go ahead and say it. Otherwise, we can.
Yeah, Harry,
49.
Harry, thank you very much. Appreciate it more than you know. I've been answering some of the questions behind the scenes that people have typed in. Feel free to email me at tomr@goldencareusa.com, tomr@goldencareusa.com, and I'll make sure I get it to somebody smarter than me who can answer it. There is one question up here that I'm going to defer to Will if he's still sitting next to you. With these policies, somebody typed in, with these policies, do you still have to pay the premium when you go on claim? And I wasn't sure without me cheating and looking at my notes at my desk, and I'm not at my desk. Will, do you know that?
That's an excellent question. Yes, with these policies you do, there's not going to be a waiver of premium with these policies.
Perfect. Thanks, Will.
Waiver of premium seems to be unique to long-term care insurance, doesn't it?
Yeah, it does. It does. It definitely is something that people seem to like, but at the time of the claim, we found that overall, even if long-term care, when you're getting those benefits, the premium seems pretty small in comparison, luckily. So that being said, I'll tell you what, I think we got most of the other ones answered. And again, Will and Harry especially, thank you so much for your time. I know that you are as busy as everybody, especially planning on going out to Vegas and winning me some money. So appreciate your time. And everybody else, thank you so much for getting on this call. And remember, it doesn't stop here. Golden Care has all the products. Go to our website, goldencareagent.com. You can see our perfect portfolio showing all the different products that literally are almost a no-brainer to have in your portfolio these days.